and welcome to this edition of Closing Trades right here on ET Now. And it's turning out to be quite an okay day, although it turned out to be a bit of a quiet start. From there, we picked up nicely, easing down a little bit and then picking up a little bit more. But yes, continue to be range bound, although the bias today is a lot more positive than we've had at our hands all through this week. 100 points up in the green, 24,800 plus levels for the Nifty futures as we speak right now. And sectorally, it's really the new age companies along with Pharma and Finance. They're the ones which are taking a lead right now. So look at Eternal, that's lapped up about almost 4.6% as we speak right now. You've got Naukri, which is holding up very, very smartly indeed in trade. Swiggy has been doing very well. Policy Bazaar has been quite the mover from the word go today. So all these stocks are where you're seeing quite a bit of traction come in. What's not looking good today is banks. They are the ones which are the underperformers. So, be it an RBL bank, which is down 2.5%, or a BOB. Some of these smaller banking names are the ones which are putting pressure, along with larger ones like an Innocent, which is down about 1.6%, or for that matter, Axis, which is also down about 1.25% as we speak right now. Financials like Bajaj Finance, also a little bit tempered, not really seeing much of a material move from Kotak as well. It's lying quiet in trade. So that's pretty much the texture of the market, but continue to hold our gains for Reliance, BEL, ICICI Bank and even HDFC Bank, which is participating in today's move. So that's pretty much the texture of the trading day right now. But Snehi, what about the stocks and news?
Well, lots of stocks in news, Asha. We've seen the entire defense space that's been a buzz in today's trading session. And one such stock that's in focus today is Garden Reach Shipbuilders. This is on the back of an MOU that they have signed with a lot of companies, 3 global companies to be precise. So Garden Reach, that stock is doing pretty well, up 2% in today's trade as we speak. Dr. Reddy is also in focus. There's been a very positive brokerage note coming in on that stock from HSBC, and also another reason why the stock is in focus today is on the back of a collaboration wherein the company and Alvotech will be getting together to co-develop a biosimilar of a drug that's highly in focus in the US at present. So the Dr. Reddy's is the stock that's in focus today, and almost a 3% gain is what we're seeing on that stock as we speak. And lastly, of course, like Aisha mentioned, all of these new age tech companies and specifically the quick commerce and the food delivery platforms are doing very well in today's trade. We've been seeing that run up in Swiggy over the course of the week so far, and today it's Eternal that is gaining all that attention away from Swiggy, and Eternal is a stock that's doing very well today, almost a 5% uptick coming in on the stock. This is on the back of a CLSA note wherein they've said that their weekly average users have now come very close to the group level, the Zomato's WAU, which is looking very good, and the gap that it had between its second and third competitors is also increasing right now. So positive note coming in from CLSA wherein they have maintained a high conviction outperform on Eternal. It is their top pick from the Indian consumer space as well. So Eternal also a stock that's doing very well today, up almost 5% as we speak.
Right, okay, that's the call coming in right now on some of those individual stocks and movers in trade. But we've got Sandeep Sabharwal as well joining in on the show right now. Sandeep, hi, afternoon. Queues seem to be drying up for the market. Do you think the next big one is now only going to be once that 90-day period on tariff ends?
I think the tariff issue is well baked into the markets, and that's also reflected in the way the global volatility is playing out. So in terms of cues, like obviously the result season got over. Now markets will be looking forward to the monetary policy tomorrow, what comes out of that and the commentary out there. And then it's how the economic data plays out. So cues will be limited. If at all, there'll be some news flow that will be related to the various trade deals, etc. So that's something we need to watch out for. Macro-wise, markets look reasonably well placed. So I think what's been pressurizing the market has been the constant flow of bulk deals, etc., which have been pressurizing the markets. So I think overall markets, I think, are okay. There's nothing to be negative about in the markets.
Negative about, but is there something to be positive about? Kunal, hi, afternoon. Been quite ranged on the markets for a while. What is the trading activity telling you? Where are we headed next?
I think except for that last, I think half an hour or mid-session today, where there was a flurry of a sudden jump in the Nifty, where it came very close to that 25,000 mark, 24,900 thereabouts. So I think other than that, it's been a very docile phase for the markets, very stagnant. We are stuck into this 500-point band for the Nifty. But the good part is that many of the stocks and sectors are seeing a breakout for themselves every now and then. Even on the VIX front, the good part, and it's a surprise because generally heading towards a crucial event like the RBI policy, we generally expect that in a normal scenario, VIX would probably have been on a rising method. But this time around, we are actually seeing in the last 2 days VIX cooling off. This generally indicates that markets are not anticipating any major kind of a surprise, at least on the negative side. And in return, it also indicates that we are not expecting any major kind of a volatility in the market. So I think on the back of this, we can expect that the markets may continue to remain into this range.
Okay, Kunal, hold that thought. Let's take it across to Shrishti, who's waiting by, because Beijing has tightened its grip on rare earth magnets, which are vital components in everything from smartphones to fighter jets. But more importantly, these magnets are indispensable to electric vehicles, and China controls 90% of their global production. Indian automakers are bracing for supply disruptions, while global majors like Ford and BMW are already feeling the pinch. Shrishti is joining us to tell us if this will throw a spanner in the EV revolution, Shrishti.
Well, yes, there's a new problem brewing in the car makers, and it starts with something that you can't even see. It's inside your EV motors, your wiper, even your headlight. And we are talking about the rare earth magnets. Small in size, but huge in importance. And it majorly started in April, wherein China made a major move, wherein companies must now get a special government permission to export the magnets made from rare earth minerals like dysprosium and terbium, to name a few. Now, these magnets power everything from smartphones to fighter jets. And here's the catch, because China controls 70% of the rare earth mining and 90% of the world's magnet production. Now, countries like India will need documents providing how these magnets will be used and that they are not for military purposes. These are the new disclosures that Indian companies have to come out with. But now you may ask that why does it even matter and how big an impact it can have on the Indian auto majors? Because electric vehicles specifically, they need a lot of these magnets, almost 3 kgs per car compared to just 100 grams in a normal petrol car, because these magnets actually help the EV motor to run fast and smooth as well. And without them, EVs can't even move. So yes, it is a concern and an involving situation indeed. But companies are now being vocal about it, and in the Indian markets as well, we have so many Indian companies now coming and talking about that. Case in point being Bajaj Auto, where they say that they can see a delay in the production post the July, and they are hoping for the situation to improve. But for now, yes, this is a developing situation. We have the comments from TVS Motors as well, where they are anticipating a short to medium term challenges because of this disruption. Other than that, we have comments coming in from Mahindra, where they are saying that for now they are covered for 2 months. And then we have Tata Motors and Maruti Suzuki. They are maintaining the stance that they do not foresee any immediate impact on the production numbers. But it's not just about the Indian auto majors. It's even the global companies like Ford and BMW. They even actually have to go ahead and halt their production. And today morning we have the comments from Suzuki. They even said that one of their models can get a hit because of this EV magnet shortage. So indeed, this is a big concern that is indeed brewing in the Indian auto major and impacting the auto industry as a whole. So while EVs are the future, a small magnet is holding the wheel. With China tightening control, automakers around the world are now racing to secure the supply lines or the risk hitting the brakes. Back to you.
Right, Shrishti, we'll take it from there. Sandeep, this is almost smacking of, when we came out of the COVID lockdowns, the issue that you had in the supply of chips, right? And that was also impacting the auto industry to begin with. It is a niggling worry, yes, and there will be that supply disruption, but eventually it eases out and the companies do find their own way. In the interim, though, who do you think is going to be the hardest hit?
Out there, the chip shortage was actually a real shortage. This is an artificially created shortage by the Chinese government because they have restricted the exports of these while they are readily available. So it's not that they are not available for export. they are not being allowed to be exported. So there's a difference between the two. So whether they have an intention of resolving it or not is something we need to see, or what's their strategy out here. Because finding a replacement or building in technologies to yourself extract and refine these will be a time consuming thing. So we need to see how this plays out. Maybe it could just all these things could just be signed and it could ease out over the next 15 days also, or it could get prolonged. So from among the companies which have indicated issues, I think the two-wheeler EV companies have been more vocal. Some of the four-wheeler companies are still saying they are reasonably well covered. And some of the pure EV companies, they might get more greatly impacted in the near term. And it's a worldwide thing. It's not specific to India. It's a global phenomena which is playing out.
Okay, so that's the take on the auto space. But Kunal, I want to stay with the auto space and I want to ask you your view on M&M going ahead, because fundamentally the numbers have been stellar over the course of many months in their auto sales numbers. But if you take a look at the stock move on a year-to-date basis, M&M is up only 1% on a year-to-date basis that we're talking about. You have names like TVS Motor, Maruti, Eicher that have overtaken M&M's stock performance. Do you see this exuberance that we're seeing in the numbers play out on the charts as well?
No, not really, Sneh. So, I look at it this way: the last 3 years, the average, gain for M&M was around 45 to 50%. In fact, last year the stock moved from 1,700 to 3,000. So, it almost like it doubled in just the last 1 year. So it's bound to be a phase where on a YTD basis the stock may underperform. But there is a different scale which one has to look out for comparing stocks like M&M. The stock which was absolutely resilient even in the phase when the market saw a major correction. Look at it this way: September 2024 onwards till say Jan-Feb 2025, there was a phase where many of the four-wheeler stocks, they were down 40-50%. Even many two-wheeler stocks like Bajaj dropped very sharply. And that was a phase where M&M still remained into a range. And the correction, I think, was just largely about 20-25% for a stock like M&M. And now when the markets have recovered, the stock has come back towards...
Kunal, we'll get back to you. I believe we have you on a patchy line. But in the meanwhile, Sandeep, talk to us about the moves that we're seeing in the pharma space every day now for the course of the week. We've had some or the other news flow coming in either on the diagnostic side, or you have them on the specialty pharma side. Today, you have news coming in on Dr. Reddy's, wherein they've collaborated with another company for a drug. We've had US FDA, issues coming up. Form 483s have been issued. Today, Gland Pharma also in focus on the back of 11 observations coming in from the French medical head over there. So give us a sense of where you are seeing this pharma space headed for here in terms of the regulatory issues that this sector is facing currently. Because all in all, while it may seem resilient as a defensive sector, it's not been doing all that well recently.
Pharma has been in the news flow for several things, and I think, and there was also news of tariffs being put on pharmaceuticals, which are, I think, under pressure of creating inflation, have been curtailed for now in the US. So there's a threat of that also coming in. Overall, as we have evaluated the pharma company results as well as the outlook, in the near term, there are no triggers for movements on either side, I would think, on a broad sector basis. So I don't think there are any major triggers for upside or downside, and valuations are also middling. So it's not that the stocks are either cheap or expensive. So I think most of the stocks will follow individual news flow.
Yeah, individual news flow it is going to be, but the one space you can't get your eyes off is the entire capital markets sector, right? It's been on fire with BSE, CDSL, both up more than 30% in just 1 month, while of course the much awaited NSE IPO could also be making some headway. Varun is here to walk us through this mega trend which is playing out in equity markets.
Off late, we have seen a good rally in exchange-related stocks. NSE in the unlisted space and BSE in the listed space, both are actually trading at their life highs. If we look at NSE Limited, from 1st of May, the stock has actually rallied more than 50%, and from 52-week low, the stock has more than doubled. Also, if you look at over the valuation, the overall market cap for NSE Limited has actually crossed 5.8 lakh crore. The valuation is around $67 billion and actually it is more than Nasdaq Inc. and also Deutsche AG. For BSE Limited also you look, from 52-week lows, the stock has run up more than 4 times and also in last 1 week, the rally is more than 13% and in 1 month, the rally is more than 30%. It is not only BSE Limited and NSE, but also if you look at the rally in CDSL stock, in last 1 week, the stock is up by around 13% and in last 1 month, the stock is up more than 30%. Now, there are several reasons because of this, because of which the stocks are rallying. One of them is strong financials, rising interest from the overall retail space in the capital markets. Other than this, if you look, the NSE IPO, there were several regulatory hurdles because of which NSE IPO was not able to come. But now it is expected that sooner or later you will see NSE IPO hitting the capital markets. Also, if you look, recently BSE has declared bonus issue and because of this there was price adjustment and actually people on the street believe that because of this, the overall liquidity in BSE Limited stock has also increased and hence you are seeing more buying in BSE Limited stock. If you look at the valuation of NSE Limited, BSE and CDSL, NSE actually trades at around 47 times PE, BSE trades at around 86 times PE of the current year, and if you look at one year forward, it actually trades at 56 times PE. Even CDSL trades at around 68 times PE. So you will look that the overall PE for these companies are little high, but because of NSE's IPO, you are seeing a valuation catch-up rally in other stocks like BSE Limited and CDSL. But yes, all the stocks related to exchange are seeing a good run-up, especially in last 1 month.
Absolutely, Varun. Thanks for taking us through all of those details. And Kunal, we have Kunal back with us. Kunal, that's exactly what I wanted to get a chart check from you on. All of these capital market themed stocks, be it CDSL, BSE, like Varun was just talking about, or for the likes, you have CAMS, Angel One. All of these stocks have done pretty well over the last 1 month. Sharp run-ups is what we've seen. Do you see this sustaining on the charts?
It seems like it should sustain staying. I think many of these stocks have actually confirmed very big volume breakouts. So I was looking at Angel One, for example, that stock has done exceptionally well. CAMS, CDSL, BAC, I think many of these exchange-related stocks also have done reasonably well. Even the other stocks like JM Financials, DAM Capital, etc., many of these stocks have started to show signs of a very good volume price uptick move. So when you see such kind of a strong move, which has been built by much better volume patterns, strong indicators, robust price action, that's a move which we believe should sustain as well as build further.
Sandeep, assume someone has completely missed out on the rally that, the capital market theme itself has actually staged in terms of the listed pool, or for that matter, not had access to the NSE pre-IPO allocation. Where can they buy now?
So I would think that if we are looking at them fundamentally and from a earnings growth perspective, I think the big up move in the earning growth potential has already played out. So I think from here on, these are steady growth stocks. So given the monopoly nature and the entry barriers into the business of many of these companies, I believe longer term they'll continue to do well. But all the companies which are being discussed are priced to perfection in a way, because 70-80 price earning ratios are at the very top end of the valuation paradigm. So I think it's tough for valuations to go up further. So people need to look for, so these stocks typically have a high beta on both sides of the market move. So when markets fall, they fall more than the markets. When markets rise, they rise more than the markets. So people need to look for opportunities when markets fell. So I think in the first quarter, many of these stocks corrected 30, 40, even 50% from the top. So, but at that time, no one wants to buy. But when they come into frenzy, people want to buy when the risk is much higher.
Point taken, Sandeep. We also have Jatin Gedia, Technical Research Analyst at Mirae Asset Sharekhan, joining us on the show. Jatin, hi, good afternoon. Thanks so much for joining us on the show today. Give us a sense of where you're seeing the broader market headed going ahead, because even when we've seen a slight bit of a blip coming in the market, you've had the broader end, the SMIDs that have been resilient. But particularly what I want to get your view on is the small cap space, because you have the mid cap that sometimes gives into the market pressure, but that is not seen on the small cap index. Help us understand where you see the broader markets headed from here on.
Yeah, see, overall, we believe that the broader market has been outperforming the benchmarks for quite some time because the index has been more or less range bound since last 3 weeks. However, the mid cap and the small cap index has been inching higher. So, yes, the broader market has been resilient. If I have to give levels on the Nifty small cap index, then there is a potential for the Nifty small cap index to rise towards 18,800 on the upside, and the crucial support is placed around 18,100, 150. So the risk reward is quite favorable. Also, there is a lot of sector rotation that is happening. So some of the stocks which are not formally part of sectors like capital markets theme, some of the FM fertilizer pack chemicals. See, all these stocks are rallying quite a bit. So we believe that the broader market strength is definitely there, and we believe that the benchmark also is likely to join in the party going ahead into the RBI monetary policy. Yes. So overall, things look positive in the broader market, and we believe that the Nifty and the Bank Nifty is also likely to join in from tomorrow onwards.
Okay, so that's an optimistic view coming in. And Sandeep, I just want to talk to you a little bit more about the policy outcome tomorrow. The street is largely penciling in a 25 bips cut. Help us understand that while for the rest of the street in terms of consumption, this may be a positive, you could have a little bit impact on banks and NBFCs. Tell us, how do you see these sectors playing out? Because even after tomorrow's meeting, the street is still expecting another 25 bips cut in the year ahead. So what do you think the impact is going to be on the entire financial space?
An easing cycle is always positive for the asset quality of banks and NBFCs. So to that extent, the valuations get a support. In the near term, in the immediate context, because of the fact that deposit rates move down slowly, the margin get hit somewhat. But I think now get that we are in the third rate cycle cut. We are in a space where the adjustment cycle will be happening in a normal phased manner. So to that extent, for the overall financial space, it's positive. It's more positive for companies which actually benefit due to rate cuts, like infrastructure, capital good companies, autos, consumer durables, etc., where rate cuts, or real estate, where rate cuts, rates moving down actually benefit those segments much more. NBFCs benefit much more due to on a rate cut cycle than banks, because NBFCs don't have a retail deposit book, whereas banks have, so they don't have CASA deposits. So a rate reduction cycle is beneficial for NBFCs much more than banks in general.
Okay, that's what the rate cut, or rather the easing cycle, could imply for the entire financial space. But what's the ET Now poll of economists and bankers penciling in? Varun is here with exactly that. Varun?
The street is expecting a 25 basis rate cut in this policy, and actually a more 25 basis rate cut in the August policy. Now, the Reuters poll says that around 87% of the poll participants are expecting a 25 basis rate cut in this policy, and around 81% of the poll participants, they are expecting a rate cut in August policy. Now, what is fueling the rate cut? It is basically the GDP growth, inflation, the demand environment, and also the benign balance of payment dynamics. Now, let me take you first to the GDP numbers. If you look at the GDP numbers, though in this, the fourth quarter GDP numbers were better than expected, But yes, for FY25, if you look, the GDP numbers are actually at 6.5, and this is actually at 4 years low. Now, if you look at the inflation, because of better monsoon, it is expected that the inflation would be in the tolerance level of around 4%, which RBI wants. And actually, in the month of April, the inflation number was around 3.2%, and it was at the lowest level after July 2019. So this is another factor. If you look at the overall demand environment, no doubt in the second half of FY25, we have seen some demand revival, but still if you look, many of the indicators, they are indicating towards a slowdown. So this is also one of the reasons because of which many analysts on the street are expecting a 25 basis rate cut going ahead. But if you look on the liquidity front, no doubt there was issue regarding liquidity in the earlier months of this calendar year, but in the month of April and June we have seen the overall liquidity situation actually improving, and that's the reason people are actually estimating that RBI will not actually put additional measures on liquidity. And also if you look at the overall stance of RBI, that is going to be still accommodative. So it's going to be a good policy wherein we will see a 25 basis rate cut in this policy, but yet this is not going to be the last. Actually, the street is also expecting another rate cut in the August policy. So you are actually going to witness 50 basis point rate cut from here on.
GDP was very high, 7.4%. GVA, which I think better picks up, where activity is, was 6.8. I think that's more believable. But even GVA was a bit higher than it has been in the last couple of quarters, although lower than where it was a year ago. So there's good and bad news. Things have improved from, say, the September quarter or the December quarter, but they are not as great as where they were exactly a year ago. A year ago, we were between 7.5% growth. Now, what created this slight uptick in March? As you said, some of them were like one-off. The fact that government spending had been a little weak, right, through the election period in July last year. And then even in December quarter, it hadn't really picked up. So a lot of the pickup in both central government and state government spending happened in the March quarter. So that helped, raise numbers. And we may not see the same type of increase in the next couple of quarters.
Okay, that's that on policy, pretty much along expected lines. The street is anticipating a 25 bips cut, and that seems to be well in the price, and another 25 post this policy as well for the remainder part of the year. But Sandeep, I guess our list of Benjamin Buttons continues. First, it was the curious case for IndusInd Bank, and now you find Keynes as well headed that way. What raised your eyebrows?
I think it's more to do with the fact that there are some companies which keep on raising QIPs. So they raised a QIP 22, and then earlier this year they wanted to raise a QIP which they couldn't. And then there was a promoter stake sale yesterday. Valuations are at 80 times or 90 times earnings. So I think very unsustainable kind of earnings. So that's the only thing.
Okay, Sandeep, thanks for the view coming in. On that note, we'll let you go. Once again, thanks so much for joining us. But viewers, with that, time to slip into a very short break on this edition of Closing Trades, and we'll be right back to discuss the market in the last 30 minutes left. So we'll see you just over almost as high as 24,900s thereabouts, but we've slipped from the day's highest point. But nonetheless, we're back in the range where we have been all day. So that little bit of a push that the Nifty had seen on expiry day has all settled out, and basically that's where we are at when it comes to the markets right now. Sensex 2 in tandem, India Wix another cool off of almost 4% rather that we are seeing today, and Nifty Bank as flat as it could be. So that's what the market construct is looking like right now. We have Kunal and Jatin who are back with us on the show today. Kunal, I couldn't help but notice SRF is at its all-time high amid a lot of other stocks, but it's really been these fertilizer stocks that have been in the spotlight for various reasons, like the monsoon, or you have chemicals that are in focus, and on the back of that, fertilizer stocks have been doing well. Give me a sense of what SRF is predicted to do on the charts. How is it shaping up? Because it has been a very good year, 6 months, 3 months, whichever chart you pull up for SRF, it's been very good moves. Do you see this sustaining, or do you believe that the chemicals or the fertilizer space are here from here on are expected to do well?
Well, they seem to be staying. In fact, SRF was one of the recommendations which I had given yesterday as well as today. because my expectation was that the stock after quite some time has found its mojo back. Not a surprise that the stock has hit fresh highs for itself, crossing 3100 plus mark quite comfortably. My sense is that we are looking at a point where many of the specialty chemical stocks are starting to show signs of a revival or a breakout. SRF has been one of the top performers, not just in this last 3 months of this market rally, but then even prior to that. So I remember, I think 2024-25, when the markets were going through a sharp correction, SRF was one of the first stocks to actually come back and make a fresh high, or it was trading closer to the lifetime high levels itself. So the stock had already shown a lot of resilience in the last many months. So I think it was just a matter of time that the stock found its mojo back and came out of a minor consolidation. I think also on the other hand, there are other specialty chemical names, the likes of, for example, Aarti Industries. That stock is looking attractive. Atul, that's a chart which I think is looking extremely strong at current levels of 7,100, 200, where it's trading right now. So there are a lot of names which are looking very attractive. And my sense that this could be a space as well as a sector which could actually perform very well over the near to medium term.
That's the take on the fertilizer space. Kunal believes that this space could do very well, and including SRF, this stock could also do very well going ahead. But Jatin, I want to come to you and give us an idea of where you are seeing the entire Nifty Metal sector headed. Today, we also have a note that's come in from Antique, wherein they say that domestic steel demand remains strong. Now, we know that the threat of tariff is largely looming on this sector, and give us a sense of where you're seeing Nifty Metal, because it's not been all that bad, but it's not even been all that good for Nifty Metal in the recent times.
Yeah, so recently there has been a lot of news flow around these metal space globally as well. So we believe that overall there are pockets of strength where we are seeing opportunities within the metal pack. One of them being Jindal Steel. So post a sharp run up, it is consolidating since last 3 weeks. Now it has reached its crucial support of the 20-day average. So we believe that the risk reward now favors going long in something like Jindal Steel, which is looking positive from a short-term perspective. Ideally the stop loss should be placed around 930, and on the upside we can expect levels of 1000. So overall, we believe that it has undergone a bit of consolidation, but now considering that it has reached its crucial support, we should see a next leg of the up move in the Nifty metal index as well as the the metal stocks.
View on the metal space. We also have Mayuresh Joshi, Head of Equity at Marketsmith India, joining us. Mayuresh, hi, good afternoon. Always a pleasure chatting with you. Give us an idea of where you are seeing the entire quick commerce, quick delivery, food delivery space headed. Just today, we have a very bullish note coming in on Zomato, wherein CLSA has maintained a high conviction outperform on the stock. It's also one of their picks, and this is on the back of the weekly active user metric that CLSA has been tracking, and it's been doing well for Eternal. The past couple of trading sessions, you've had the spotlight on Swiggy. Today, suddenly you have Eternal that's back in focus. And amid both of these highly competitive players, somewhere you're also hearing news flow that Zepto is delaying its IPO. So give us a sense of where you're seeing competition shape up in this industry and who would at the end emerge victorious or where?
Very good afternoon. I think it's about perspective, right? Because if you probably have a larger time landscape and a horizon kept in place over the next 4 to 5 years, obviously the expectations in terms of core metrics, whether it's the food delivery business or whether it's the quick commerce business, is expected to garner further steam. Because what you're probably seeing in metro areas right now will get penetrated and extended to tier 1, tier 2 cities as more discretionary spending comes through. And therefore, I think the scope and the opportunity that all these players probably have are relatively large. Having said that, I think both players are in a very aggressive capex mode to improve and increase their dark stores, in fact, double their dark stores over the next 4 quarters. And therefore, I think the kind of expectations that one really has from an earnings perspective and from a cash flow perspective, they're definitely going to take a hit. You've obviously seen that in numbers. Specifically for Eternal, as well as Swiggy to a large extent. And let's not forget competition. So to that extent, I think as cash flows get dampened because of all these factors at play, competition is also brewing up pretty strongly. So you've seen Geo and Geo Mart actually expected to expand its operations, the pilots that they're probably running. We don't know how the Amazon pilot is expected to take place. And we are hearing from a few large multi-retail stores actually starting to have their own ecosystem as far as deliveries are concerned. But the bottom line is there is sufficient tailwind, as I said, over a longer periodicity of time in terms of a lot of dynamics at play. The ordering activity in terms of the number of customers, the expectations of the size per order, and therefore the expectations that one really lays out in terms of the margin profile and performance, both in terms of the food delivery as well as the quick com business, is something which will remain steady and improve. However, at this point of time, my own sense is that numbers will be a little bit soft because of all these factors at play. But again, I think stocks like an Eternal, as an example, I think they should come back and bounce back very, very smartly by the end of this year, once largely the capex program and the opening of the dark stores is probably done and dusted with. So I think, yes, ratings, rankings look fine as we speak at Marketsmith India, and therefore I think this is one stock that we need.
Okay, so bullish call on Eternal, and numbers are expected to be soft for a little bit ahead is the word coming in from Mayuresh. But Mayuresh, hold that thought, because let's address the auto space. On the sidelines of the CM conference, Samir Dixit caught up with Vikram Gulati of Toyota Kirloskar Motor, who lauded the new EV policy and also chimed in on the impact of China's chokehold on rare earth magnets. Let's go across and listen into that interaction.
Well, India has been a very resilient country. I think our automotive sector is also very resilient. It is a matter of fact that if you look at the global capacity for rare earth magnets or the rare earth processing, the primary 90% for magnets and around 85% for the raw material lies with the one particular country. That's a fact. And therefore, if there are some certain conditions put up, it applies to everybody world over, and that to India as well. It is also a fact that rare earth as well as magnets from rare earth are now finding a lot of applications across various industry sectors, including the automotive. The use is definitely going up with electrification because the electric vehicle does need a significant amount of rare earth magnets for the motors, etc. Although there is also application for other technologies, including ICE. I think for us, the key takeaway as a nation is what Government of India and the Honorable Prime Minister has been focusing on, which is the need to become self-reliant. And also the fact that the government has been talking about multiple technologies being applied in our quest for self-reliance towards energy and sustainable mobility, because there are other technologies which can very impactfully today play that role of lowering fossil fuel consumption, carbon emissions and pollution.
Well, indeed, that's a really pressing matter right now. And let's also go back to Mayuresh, because Mayuresh, I want a sense from you on the impact that we can expect from this rare earth issue that has taken place, and also the magnets issue, because China, as we understand, controls 90% of the world's market when it comes to this. Give us a sense of what impact we could see on our Indian EVs, because on one hand, just very recently we've had the government's EV policy push come out, wherein there have been incentives to produce more EV in India, and now we have a headwind as big as this. So how is this going to play out for our sector, and how quickly do you believe Indian autos can find a fix around this?
I think the concern here largely is that the overdependence in terms of China still continues to a large extent. And therefore, I think China becomes one of the biggest drivers in terms of determining the policy as far as raw materials are concerned for a large part of the EV ecosystem. And therefore, I think when there are no diversified or alternate supply chains to probably coexist or have the quantum of supply that China can probably do, there is some element of overhang that probably comes through. You had seen that earlier as well, right? A few years back when the semiconductor issue had cropped up and companies had to go through a transition phase where there were no semiconductors in the market at all. And therefore, I think the production pipeline itself got choked. Obviously, apart from this issue, which is obviously a big issue in terms of a headwind, for the sector as a whole. The overall demand dynamics have come off quite significantly. What we've been reading through in terms of our global coverage and global reports as well, the EV adoption rates have come off quite significantly. The kind of capital impairment that has probably happened on a lot of balance sheets. You talk about the Volkswagen Group, you talk about the Mercedes Group, you talk about JLR. I think a large part of their balance sheet in terms of cash flow impairment, specifically in terms of R&D for electrical platforms, powertrains have been quite significant. And if demand comes off to a certain extent, the kind of balance sheet hit that might happen from an immediate short-term perspective can be relatively large. The last point being, let's not forget the competition perspective as well. The BYD is coming out with strong content models. They're coming out with pricing, which is very, very competitive as we speak. And therefore, I think one of the biggest markets outside the US probably remains China. EU demand is still a little bit soft. And therefore, I think the market is facing a lot of headwinds as we speak. So I think we'll be a little bit careful as we are tracking these global trends to probably be not that aggressive when it comes to EV as a pure.
All right, so that's the take coming in from Mayurish, that how this rare earth magnet shortage can actually impact the sector. But on the bottom of your screen, just a while back, we have the news flow coming in from BEL. This stock has done very well in the month gone by, especially in the month of May. And now the news flow suggests that new orders worth 2,323 crores has come in for BEL, and hence a bit of a jump coming in. But Jatin, if I can quickly have your take on this one, where do you see the stock headed?
So overall, we believe that BEL is one stock which has been consolidating after a sharp run-up since last 1 week. So I think now the stock is poised for the next leg of up move, which can extend towards 408 to 412. So therein we have the daily upper Bollinger Band as the resistance. So we believe that there could be around 5 to 6 odd % up move even from current levels. The crucial support is placed at 387. So risk reward quite favorable for going long even at current levels.
Okay, Jatin, while you are talking about BEL, also help us understand some other stocks that you're liking at the moment, if anything at all. What would be your BTS trade idea?
Yeah, so we have a couple of long ideas. The first one being L&T Finance. So a classical flag and pole pattern breakout, trading around the highs, closing around the highs for the day. So strong demand coming in. So we are expecting the rally to continue in L&T Finance. So that is a long idea. Stop loss should be placed at 174. And on the upside, we are expecting 191 to 193. Another recommendation that we have is from the power space, that is Power Grid. So Power Grid has been, falling in a downward sloping channel since last 4 to 5 weeks. Now it has reached 20-week average support, and thereafter we are seeing strong buying interest. So we expect the up move to resume in Power Grid. So that is a long idea. Stop loss should be placed at 289. On the upside, 306 is the target area.
All right, so that's those are the two buy calls coming in from Jatin. But Mayurish, any particular stock or sector that you believe can do well in the near to mid-term?
So I think agrochemicals is one space that we remain extremely bullish upon. I think a large part of these stocks within this universe have moved up quite significantly. The other area that we obviously like was healthcare. We continue liking that. And within healthcare, hospital stocks are something that have done exceptionally well in the quarter gone by. The expectation again here is that the kind of dynamics that are playing out specifically from a P&L perspective, they're having an asset-light model, which means the kind of bed additions that they are doing or have done in the last few quarters have largely been on an adopted asset-light mode, which has ensured that debt or leverage does not increase quite substantially onto the balance sheet. And therefore, I think as the new hospitals have started coming up and maturing, and as they reach that maturity period of 2 years, the 4 parameters that one really looks at in terms of average revenue per operating bed, the average length of stay, and because there is no sufficient capex that has got tied up, on a per bed basis, the incremental return on capital employed is significantly better as we head to the next few quarters. So generally, the space is looking good. I think the numbers have been relatively better and are expected to remain strong and steady into the next few quarters. A couple of stocks that we continue holding in our global and local portfolios is Krishna Institute of Medical Sciences, where our belief is all these aspects that I'm just enumerating should play out onto the P&L, onto the balance sheet, ultimately resulting in better ROEs and ROCs for the investor at play. And also Fortis Healthcare. The numbers had been exceptionally good for the quarter. The expectations in terms of not just the hospital business.
We've got Marish on a patchy line. We'll try and reconnect that. But Jatin, what are you making of this entire real estate space? Because it seems like this sector has just been revved to revival, if you could call it that, in the last couple of weeks. And particularly want to get your chart check on Brigade as well as Sobha. Because while the other companies have been steady performers, Sobha and Brigade have been soaring in the last couple of trading sessions. How sustainable is this on the charts going ahead, and can this trend continue?
Yeah, so overall, I think the interest rate sensitives are anticipating some kind of a positive news flow from the RBI policy, and that is why we are seeing the real estate stocks, rallying since last couple of weeks. So overall, on the stock Brigade Enterprise today, there has been some amount of profit booking from the 1330 odd levels. However, what we see is that there could be some amount of consolidation that can come in post this sharp run up. However, the uptrend is still intact, and until and unless the stock slips below 1200 odd levels, we are expecting the up move to continue. On the upside, the next crucial hurdle for Brigade Enterprise is placed around 1380 to 1390 odd levels. So these are the levels that one needs to keep in mind for Brigade. As far as Shobha is concerned, yes, so Shobha also is witnessing some profit booking from the higher levels. However, the uptrend is still intact, so that could be some amount of consolidation going ahead for Shobha as well. In terms of levels, 1720 is the upside target that we are seeing, and the crucial support is placed around 1530 odd levels. So buy on dips would be the preferred strategy for both Shobha and the other stock. Overall, the trend still remains positive.
All right, so that's the take coming in on a couple of these real estate counters. Tomorrow is indeed going to be a bit of an interesting day. But moving on, even as the global markets grapple with uncertainty, Morgan Stanley is doubling down on India. Top strategists Rhythm Desai and Chetan Iyer, Jonathan Garner, Upasna have called India an oasis in a desert backed by solid macro fundamentals, rising capex and a resilient services sector as well. Here's why the investment giant remains bullish on India's growth story.
India's earnings growth is right up there with the best in the world. And a key point we also make about the Indian financial system at the moment is that bond yields are not volatile. 10-year yields are very well behaved and actually trending downwards in India. And equity market volatility is now well below the average in global equities. The systematic investment plans, the SIPs, and other domestic flows kind of drive that. It's just a very strong story.
If you do a little bit more intrinsic valuation, stocks are cheap. And this is not something that people outside India have completely understood, which is why they are underweight. I think India is in this, is what I term as the oasis in a desert. I suspect as we go into the second half and beyond that, and there is some stability in US policy, corporate issuances will pick up. And that will give an opportunity for foreign investors to continue to engage in Indian stock markets.
India is relatively insulated to the extent to which its exposure to global goods trade cycle is much lower than everybody else. And at the same time, it has this structural domestic demand story, which is also much stronger than the rest of the region. And if you see the trajectory of Indian government, both center plus states taken together, revenue expenditure versus capital expenditure, both the lines are moving in the right direction. Over the last 5 years, we've seen a consistent decline in revenue expenditure to GDP, and that has been taken as an opportunity by the government to increase its capital expenditure to GDP.
With the inflation outlook remaining benign, as I mentioned, you'll see readings closer to say 3.5% in the next few months. And even if you look at 1 year forward inflation forecast, they'll be pretty close to 4%. So, RBI will be comfortable that inflation is durably aligning with its medium-term target of 4%.
Okay, that's the word coming in from the panel of experts at Morgan Stanley. But we have Mayuresh back with us. And Mayuresh, I don't know if you heard Rhythm Desai just say that he believes that valuations in the markets are fairly priced in right now. Would you concur with that view, or do you believe that the market is at a level where you have the negatives priced in, but also the positives are largely priced in as well? Is that the view you hold right now?
At the juncture, yes. But I think if you have some element of crystal gazing over the next 4 quarters, both from a macro as well as a micro perspective, I think India probably seems to be better placed than most economies across the globe. Our macros are standing out on a whole host of parameters. Our banking system is very robust as we speak. The asset quality pressures across the banking system have come off quite significantly. There is ample liquidity that RBI has provided. There is expectations that there might be a 25 bips rate cut tomorrow as well. And therefore, I think from the macro perspective, including how the government is probably spending on its capex account, is significant enough. Along with the other drivers, including the tax cuts that have happened, better monsoons that can drive total consumption and ultimately drive macros to a large extent. So I think the second half, where everybody has a focus for the last so many years as far as India is concerned in terms of earnings recovery, can it be different this time around? Our own sense is that looking at how earnings have shaped up for the quarter gone by, earnings should remain resilient and come back very, very strongly this time around in the second half. And therefore, as we speak, valuations are fair. But as earnings pickup starts happening at the latter half or back-ended as the financial year probably culminates, we're probably going to see a much better effect come through as far as the overall numbers are concerned, and therefore a better rating as far as the Indian economy is concerned as well. So remain optimistic in terms of the premium valuations that India is probably.
All right, so remain optimistic on the India growth story. But other than that, we are heading for almost a decent close for the markets, because Nifty is very close to that 24,800 mark as well. And on an intraday basis, we did cross those levels. But it's big boy Reliance as well that has been lending support. But Jatin, quickly, if I can have your take on Reliance, where do you see the stock headed? Can we expect to build on to some more gains from these levels?
Yeah, see, in the case of Reliance, there were multiple hurdles which it has crossed. 1430, 1425 was a strong hurdle that it was unable to cross. However, today it has given a very decisive close above the 20-day moving average. So now it's very close to its recent swing high of 1460 on the upside. So I would believe that there is the positive momentum is likely to continue in the case of Reliance. At least the price action today is suggesting that. So we are expecting the up move to continue. In terms of levels, 1480, 1490 is the level around which we are expecting this rally to continue. And on the downside, the crucial support, which was the crucial resistance, which was acting as a the crucial level which was acting as a resistance, will now act as a support. So 1430, 1425 should act as a strong support, and on the upside 1490 is the target area.
Jatin, thanks for that view. But before we let you go, very quickly, could you give us a sense of where you expect tomorrow's market to open in the morning? Are we expected to continue being range bound?
Yeah, so I believe tomorrow's opening would be on the positive side, considering that we have held on to the 24,700 mark. So we are expecting the Nifty to open on a positive note. However, post that, until the announcement comes, we can expect a range-bound price action only. So positive opening, post that some range-bound price action is likely.
But continue to be range bound from there on is the word coming in from Jatin. Mayuresh and Jatin, thank you so much for joining us, and thanks for speaking to us this afternoon. But as we wind down today, let's take it across to my colleague Ashesha, who's waiting by with a sum up of the day. Ashesha.
Well, yes, turned out to be another great day for the Indian markets, although we are ending the day slightly from the highest point, but despite that,